Wanted to address some of these questions. I'm looking at the ROIC member questions. Um, if from Sean, who's a ROIC member, if we go into a recession, how impervious do you think tech stocks like Amazon and Microsoft are in terms of holding their value? And I think I've done a lot more macro research this week, and I will continue to do more. Again, it is my hobby. I am not a trained macro hedge fund analyst. I am a trained corporate security hedge fund analyst. And so what I do is I look at specific companies and can tell you if they're undervalued, overvalued, and how good the business model is. There are macro guys out there that look at the dollar peg. Like there's talk about Trump wanting to break the Hong Kong dollar peg. Like that stuff is interesting to me, but I am no expert on that, but I can talk about that. Where I believe like tech stocks, especially the very large ones like Amazon and Microsoft, like Amazon's rallied 50%, right? They've basically, let me look at their chart. Yeah, I mean, back in March, they were trading for 1,700 a share, and now today they are 3,200 a share. So they basically doubled, and they are trading at like, they are a $1.6 trillion market cap company now that is trading at 5 times sales and 36 times EV to EBITDA. Now, is that cheap? No, that's not cheap. But we have already seen that the flight to safety hasn't necessarily been to gold per se. A lot of the flight has gone to either COVID or either very large companies that will benefit from COVID or very large companies that are unaffected by COVID. And so I would say those big, very large software companies in this, especially in this recession, are clearly not even holding their value, they're rallying. And so the question is, if we see another downward trend towards the market or in the market, will they hold their value? And I think if you're holding a gun to my head, I would rather hold a slightly more expensive, great company that is unaffected or is going to come out of COVID even better and is so much more resourced than hold a value stock. And this is hard for me to say, like a deep value stock, meaning like some oil and gas pipeline thing that's trading at like 3.5 times EBITDA. I am a trained value investor. That's how most of us are on the street. Whether you're a growth investor or like a value investor, it's all rooted in the same concepts. And so we all read Buffett. We all grew up with Buffett, Graham, like all these things. And for some reason, I'm trying to learn macro trends as best as I can in real time, because I believe there are larger forces at play than just a U.S.-centric recession. Let's see. So before I go to the next question, let me go to my DMs. It reminds me of something really interesting that someone DM'd me on ROIC. Hold on, messages. Yeah, Dane. Dane, if you're on, thank you so much for the tip. I am continually Dane W, who is a ROIC member, DM'd me and asked me to look into the dollar milkshake theory, by this guy named Brent Johnson. And I won't go into it today. Maybe I'll do a video on it. It's very, very interesting. And so where I am coming out is I am trying to get up to speed on Ray Dalio's views and Brent Johnson's views and a lot of these macro guys, these global macro guys. But what I am convinced about is with this low interest rate environment, everything and the trade weirdness and the currency weirdness, and I do believe that we are undergoing a period of time where we will see a rapid hollowing out of the middle class of almost everything, and the winners will benefit extraordinarily well through this time frame, and the losers will lose extraordinarily hard. And I think that goes with great assets are getting bid up to the moon, and value is underperforming because the deep value assets are continuing to underperform. And I mean, you can even say the same thing. We talked last on Monday about how only the richest people own the stocks, right? So as stocks go up, the rich get richer, and the poor or the bottom 90% of Americans, by kind of by disassociation with financial assets, get poorer, right? So I think you're going to see that theme of the great divide. I think we are undergoing a great financial divide, whether that's countries, currencies, equities, and wealth distribution. It's scary, and the only thing that I would pause is, like, before fully putting my weight behind the great divide, is, right, I have to stop myself. And whenever you hear someone say we are in a new normal or a new paradigm, every single time people have said that, in retrospect, they've been wrong, and that's been a bubble. So again, like you guys, a lot of you, like, I mean, again, a lot of these global macro guys don't really know, right? They're like, some of them are fighting with each other. So just, again, my 2 cents.